and Christmas is just around the corner. We may be spending money, but what effects does the holiday spending have on the economy and the stock market, especially this year? For more on this, we're joined on the KCBS Ring Central Newsline by Barbara A. Friedberg, investing expert, former university finance and investing instructor, portfolio manager, and a writer for U.S. News and World Report. Thank you so much for taking the time to talk to us. We often look to the stock market as a sign of whether the economy is healthy or not, but how does the stock market fundamentally differ from the economy itself?
Hi, Melissa. The stock market is not the economy. The stock market actually measures the performance in general of a group of companies that are publicly traded, whereas the economy measures employment, production, and many other factors. And what you'll find is the stock market is an aggregate measure driven by the performance of several very large companies. So I'm sure you've all heard of Facebook, Amazon, and Netflix and Google. Those companies are actually driving the performance of the stock market. If you take those out, the stock market is actually only advanced 5% this year.
So what does our spending have to do, our spending in general, and specifically spending at this time of year, have to do, or how does it impact the stock market versus the economy?
In general, the consumer spending makes up about 70% of the economy. So consumer spending is really important when you look at the growth of the economy. Whereas when you're looking at consumer spending and the stock market, clearly companies are selling products to consumers, and consumer spending helps the stock market. So in general, consumer spending is good for both the economy and for the stock market.
If Congress passes a stimulus bill before the end of the year, would that be enough to sort of to increase spending, holiday spending enough, or post-holiday spending, that it would have an effect on the economy for the fourth quarter?
It depends how much the spending improves. So if people use that stimulus check to put back into the economy, which likely they will, then yes, absolutely, that will help the economy numbers for the fourth quarter. If they don't spend as much, if consumers don't spend as much as anticipated, and they save some of the money that they receive from the stimulus, or they invest it, then the numbers won't be as robust for the economy in the fourth quarter.
If people aren't spending as much this holiday season as they usually do, well, could that potentially have an effect on the economy in the first quarter of next year?
Absolutely. If people are not spending as much, it hurts not only the economy but the stock market, because what drives the economy? That's employment. If people aren't spending, then there's going to be layoffs because companies can't afford to hire as many workers. So spending is such a major part of the growth of our economy because it supports businesses both local and global, and it also keeps people employed.
All right. Well, we thank you so much for taking a few minutes to talk